Welcome to today's feature presentation, Trade from Your Chart. Prior to going into details, please take a look at our legal disclaimer so that there is a risk in trading and that we are not acting as brokers or dealers, we are educators. And the word never loss trading does not imply that you never lose a trade. It's a method of never stop loss trading where we show how to repair or hedge a position when it goes against you. On the left side, you see me. My name is Thomas Baumann. I'm your presenter today on behalf of Never Loss Trading, a Nobel Living company. Technical analysis in all its dimensions is a wonderful tool to find and react on assets with price moves, because technical analysis is supposed to highlight assets that move, and also it should give you the entries where you best enter and also an approximation of where you best exit to make a good part of the price move your own and participate in it. Trade what you see is our key topic today, and we want to let the chart tell when to buy or sell. So here I put an example together of what's called an never loss trading top line. So you see at certain conditions, we know that we want to do something and we want to do that either to the dot or for 5 bars. And so that puts us into favorable territory, first of all, knowing when we enter a trade, and secondly, knowing when we exit, either when a certain target on the chart is reached or when a certain number of bars is surpassed, then we get out, because we then assume for the price to either halter, retrace, or reverse. However, that is even easier said than done, so that the chart tells you when to buy or sell. What I put on here is the SPY, the spider, for the S&P 500. And so what you see here is a simple analysis where we have a moving average and we cross those with the candles that are there. And we want to see how many good entries and how many bad entries we have following the principles. Although when those two lines cross, so we go long or short, so like here would be the case, or there would be a short, and then they cross again, and so there would be a long, and we'll see and we count up the good trades and the bad trades and to see if that would be bringing you in favorable territory. So to do that, I expanded the chart a little or magnified it, and so what you see here is the same chart. So here I put the SPX, not the spider. So on the SPX, moving ahead and saying, okay, so where for the big contract do prices move? So the first entry, magnified a little deeper in it. You saw here was the moving average crossing. There it says go long. Wonderful. We go long, and poof, unfortunately, because we put normally our stop down here. There, bang, even though the direction was right, we stopped and we are out of a trade. And here on the second entry, we had a short because, we were crossing to the downside. Bang, immediately in the next candle, we were going short in the morning. And during the duration of the day, we were stopped again. So we tried 2 times getting into a directional trade, and 2 times it just got us, because somewhere you have to put a stop to not increase the risk exorbitantly, or you'll have to have a method of protection. We don't want to do that in here. And then there was a third entry. So here you had the crossing. So that bar gave us the entry. There was an entry. So we had a winner. But what is the situation? Out of 3 trades, and we are looking here at the terms of about 11 weeks, we had 2 losers and 1 winner, most likely not coming home within bringing money. Have you ever experienced such? Most likely many traders do, because else you wouldn't be here and wouldn't want to look for a system that helps you, giving you a more good trades than bad trades. That's an imperative for winning in trading. To trade successfully, you need a system that follows the underlying structure of the market, and we'll get to that. Giving you repetitive patterns, announcing when an asset is ready for an upside or a downside price moves, and you have to have the right strategies, regardless whatever account you trade from, to follow those directions. That's an imperative for a good trading system and for you to have the chance to make money in the market. Unfortunately, many of the common technical analysis tools, they are form feeding, with simple math, current structure in much more past oriented into the future, and that doesn't work. The action of now has nothing to do with what will happen, what happened in the past. It'll trigger what will happen in the future, and so therefore you need something that follows the underlying structure. What you want and need as a retail trader is a system that gives you a higher than 65% predictability. How do you account that? Just take your current system that you have, let it look at 100 trades with clear-cut entry exit stops and see how many you get right and how many get wrong. And if you're not above 65 or close to the 65 mark, you most likely have no chance to come out clear and to come out with money as a retail trader from trading the markets. Trading success results of two things, and I give you an example for the last couple of weeks for Apple. Yeah, trading success is accountable by high predictability, or high probability trade. So you need to be very clear so that the trade does what it's supposed to do by your rules. And you have to have a high participation rate. Yeah, so 3 trades in 11 weeks, that's not much, which the other system gave you. So therefore, we are looking now at a system that is producing, first of all, more entries, more opportunities, yeah, participation rate, and higher probability so that you get the direction more right than wrong. This is how such chart looks like. It's called the Never Lost Trading Topline chart, and it gives you instances where it has clearly spelled out entries here. So when a price threshold that is spelled out here, yeah, 111.02 is surpassed the next candle, which you see as the case, then you trade and you do that for either a certain target or up to 5 bars. So we'll do that all later. We count that up. And then here you see again, there's an opportunity, sell below 95.68, next candle ticked it out and came to target. So either you do this, yeah, so you had your dot target, or you have 1, 2, 3, 4, 5, yeah, so then you would have also made your direction. And there's clear-cut rules to all of this, yeah, so those trades don't happen random. They get portrayed by an algorithmic indicator which is following the markets. There's many more other details on it. I don't want to bother you. I just want to give you the key principles of what can potentially work for you better than what you have right now, and I'll guide you through in how that is made to work for you. So looking at the rules and the rule base, yeah, at any instant you wanted to have a clear-cut rule, as I had shown you prior, yeah, so you see on the chart what's happening. And when you have that, you also want to have clear exit rules, yeah. So the exit rules was either at the dot on the chart, yeah, which is the target dot, yeah, you see one like here, or at bar number 5, then you're out. Simple, yeah. So it's simple to follow. So when you see that, it produced here 10 trades in 12 weeks here, so many more, much higher participation rate, and in that case, 10 winners. Yeah, all of them were winners, following clear-cut rules and bringing the trade to target either after 5 bars or at the exit dot on the chart. Yeah, so when we look at those instances here, so here, as I had highlighted them before, yeah, when we look at those instances again together, so then you see here, yeah, there were 2 entries, one up here and one down there, and both came to target. There was another entry here, and it came to target. What's with this one? So look, the next candle didn't tick it out. And that's what we want. We want market confirmation of the direction. So therefore, look here, there's a potential trade going down, but the next candle didn't cut out the low. So therefore, we can walk away from that trade. We're not getting into it. We're not getting short here. But on the reversal, here the long trade, you see the next candle here ticks higher. There were even 2 indicators giving us a direction. And then afterwards, we have that indication here again. So go along here. So we participate multiple times in directional trades with that system. And at the end of the day, yeah, so we calculate it up. So what did it give us? Yes, so it gives us clear-cut rules, entry, exit, and the action of now, not the action of the past, like many other systems use it, is defining what's going on. Yeah, and when you trade for a higher number of bars, like 5, you also have a good risk-reward setup at entry. And also what you see in here, if you trail a stop here, so this would be the stop line if you trail and if you go for a longer run. And on the way up, it sits low and gives you the kind of volatility that the price needs to follow through until it comes to target. And you see here, the moment that lower line is cut by a price point, then volatility comes in and a new price direction has to be found. So the chart helps you to make all these decisions. You see here again the overview chart and what I was just telling you, multiple instances of where price moves are identified and confirmed by the price direction moving in that. So all in all, we had 10 trades, and even we had 10 positive trades. And one instance we don't want to trade, like over earnings. We usually don't like to hold a position, because why would we do that? If we have high predictability, why to take such a risk for predicting when we have no chance to, but right after earnings, you saw here, we had a nice up move and a winner we participated in. Let's go a little bit into the background. To help predictability, we need two things. Clear-cut definitions of when we enter a trade, but also the same when we exit a trade. And we use one indicator here for every bar. It's called SPU, speed unit, internally developed thing at Never Lost Trading. It defines how far the price expansion most likely lasts. So every time at entry, we got an idea of how far the price expansion lasts, can balance the reward to the risk, and see if we accept the trade. So we use very different mathematical models to do that, because with that we filter signal from noise, and we only take situations which are favorable for us at setup, and then we follow them through. And if something goes wrong, that's what we teach too, how to adjust the trade. Yeah, how to adjust the trade in its duration when something gets triggered. You saw that red line before, so when that gets hit, we not always walk away from the trade. We are doing measures of adjustment, and they don't even cost money. We get money, and with that, we'll do that. The underlying structure or price model of the market that we follow is as follows. Yeah, institutional leaders, so big investors, they make a price move or motion. Other participants recognize it, and so do we. When then they formulate a certain threshold and buy in it or sell into a price move, then we know from the get-go by our SWU measure how far will the price expand, and we expand for good beef of the market. When the direction is not confirmed, we don't want to be in a trade, because then we are uncertain that the price direction will hold. And you saw prior in 11 weeks, 10 trades. That's super duper. That's nice. From a daily chart. Yeah, we just took a daily chart. Do we trade lower time frames? Absolutely. Yeah, we trade all kind of time frames today. I just wanted to focus a little bit on daily chart and on overall developments, but we are day traders too, and we trade shorter time frames too. What we do to predict the action of now into a high probable future is we use the fractal based math. So what you say, wow, what is this all about here? A fractal is basically a change in behavior. Yeah, so we'll have that. And it's a repetitive change of behavior. And so that is a Mandelbrot diagram that was coming out of the invention of that type of math. So you see here, these structures, they repeat themselves. And this is what we have. We have repeating structures based on the underlying of the market, which is giving us happenings at different time frames, from shorter to longer time frames. Surely it does work on tick base or range bars too. But let's dive a little bit deeper. Yeah, so we look at price momentum changes. So not just the price change in itself, measure it, see its acceleration of the underlying what's going on. We look at trending tools, yeah, and then we get a couple of really good ones on those. We look at statistical volatility change of the price move, and we use the price move constellation, because fractal-based math, some people, they say it's just a combination of price move over 5 terms. No, it's not. There's much more behind it, and we translated that into multiple meaningful systems that are always suited to your wants and needs. And surely we also look at volume. Yes, some instruments volume is not reported to retail traders or is not present, like Forex, but also we look at volume changes for those instruments that are reporting volume. As said, so we offer multiple systems, and we always work them down to your individual wants and needs, because we only teach one-on-one. Yeah, and with those multiple systems that we have, we also support you with alerts. What does that mean? So we tell you the assets ready for trading that have the favorable chart constellation or setup you're looking for. So we'll help you to not go through hundreds of charts every night. We'll help you to have everything basically delivered in your inbox, so that you can choose from the alerts which trades you want to be tackling as a day trader, as a swing trader, or as a long-term investor. And to do so, I also have a write-up for you. Yeah, so if you like what I'm showing you here in a detailed write-up, so here you write to contact@neverlosttrading.com, subject trade your chart, and I'll send you the write-up to what I'm expressing here in that video, and you can read through it again. And then afterwards, if you get interested in what I'm offering here, we then can get together and look for your individual situation as a trader and what you want to achieve which of our systems work for you best. That's a productivity index that we worked out, depending also on how many trades a person does want to make. But those are the number of trades times the probability times the win rate times a lot of these factors where we compare our individual systems. And when you like what you have and see in here, we help you to tailor it to you, to your wants, to your needs, and we also work a business plan with you. A business plan will be a financial plan and an action plan so that you first of all know what to do and when, and also formulating a kind of like what your expectation should be from your investment portfolio to move ahead and forward within being a trader on an individual basis, either as a full-time trader or as a part-time trader. We train you and coach you in what we call mentorship programs. What do they contain? Yeah, first of all, it's one-on-one teaching and coaching. So there's always a coaching session after where you can send in your trades for feedback, ask your questions, so you're not let alone when your hours of teaching are over. Yeah, all the software that we have is installed for you and it runs on a free program, so where you don't have to have monthly fees to obtain real-time data. You always get a session recording so that you can go through the learned again and again until it sits and until you can replicate it and redo it. And in addition, we also have written documentation on the basis of the system that you decide for, but also for certain other elements which you might want to trade. And we help you that you be clearly documented. You can read through in an electronic form on your iPad or Android device, whatever you want to do with that after. And you have upgrading opportunities because many of the never lost trading clients, they like to trade with more than one system. And you might ask yourself, why is that? Yeah, the first one got paid off and I want a higher what? Participation rate. So they want more signals, higher participation rate. And so therefore then we work with them, letting them participate on a higher rate in the market and take more out of this. When you like what we do here, and we also show you what how to hedge and protect, that's important. I already would have forgotten that one because that's an important skill, in particular if you're a little bit longer term trader, if something goes wrong, that you can do something to repair your trade and even turn a potential loser maybe in a potential winner. Yeah. So these are important skills that you will learn in our mentorships. At the end of the day, with the help of our systems and our alerts, you're going to know the symbols to trade. Yeah. You're gonna know the time frames to best trade on because not all time frames are meaningful. Then we show you why and which ones to best choose. And we show you on which signals you enter and on which signals you exit. You saw that from the charts that I showed before. And also, at a certain point in times, you saw the one, hey, look, over earnings. If you trade there, either you go protected or you go full-blown risk. But make it meaningful so you also know when to not trade at best. Yes, so when you like all of this, what we showed you here, feel free to ask for a personal consulting hour. Yeah, look up at our webpage for the different systems that you already can maybe specify. So this is what would be the most appealing to me. And then you can reach us either by calling the office 866-455-4520 or write us an email at contact@neverlosttrading.com. By teaching one-on-one, our capacities are always limited, so do not miss out, and we are looking forward hearing back from you.